Have you ever wondered which single book the world's greatest investor would recommend if you could read only one investing book in your entire life? Surprisingly, Warren Buffett doesn't recommend a book filled with stock tips, trading strategies, or shortcuts to becoming rich. Instead, he recommends a timeless classic that completely changed the way he thinks about investing. That book is The Intelligent Investor by Benjamin Graham. In this video, we'll explore why this book is considered the greatest investing book ever written, the powerful lessons Warren Buffett learned from it, and how you can apply those same principles to make smarter financial decisions. Let's begin. The Intelligent Investor was written by Benjamin Graham and first published in 1949. Warren Buffett first read this book when he was just 19 years old. He later described it as the best book on investing ever written. What makes this book special isn't that it predicts the future. Instead, it teaches you how to think like a rational investor. Buffett was so inspired by Benjamin Graham's ideas that he later studied under him at Columbia Business School and even worked for him. Many of the investment principles Buffett follows today come directly from this book. Benjamin Graham is known as the father of value investing. Instead of chasing popular stocks or market trends, Graham believed investors should focus on the true value of a business. He taught that successful investing is about careful analysis, patience, and disciplined decision-making. His teachings shaped generations of investors, including Warren Buffett, making his influence one of the greatest in financial history. Lesson 1. Invest, don't gamble. One of the biggest mistakes new investors make is treating the stock market like a casino. Benjamin Graham reminds us that when you buy a stock, you are actually buying a small ownership stake in a real business. Instead of asking, will this stock price go up tomorrow? Ask yourself, would I want to own this business for the next 10 years? That's exactly how Warren Buffett evaluates investments. He buys wonderful businesses, not just attractive stock prices. Lesson 2. Mr. Market. One of the most famous concepts in the book is Mr. Market. Imagine the stock market as an emotional business partner. Some days he's extremely optimistic and offers very high prices. Other days he's scared and offers very low prices. His emotions shouldn't control your decisions. As an intelligent investor, you decide when his offer is attractive and when it should simply be ignored. The market exists to serve you, not to instruct you. Lesson 3. Margin of safety. Benjamin Graham introduced another powerful concept called the margin of safety. The idea is simple. Never buy something simply because you like it. Buy it only when the price provides a cushion against mistakes or unexpected events. Imagine a company's true value is much higher than its current market price. Buying at a reasonable discount reduces risk and increases your chances of long-term success. This principle has guided many of Warren Buffett's biggest investments. Lesson 4. Think long-term. Today's world encourages instant results, but investing rewards patience. Warren Buffett often says his favorite holding period is forever. Great businesses continue growing year after year. The longer you stay invested in quality companies, the more time compounding has to work. Successful investing isn't about making quick profits. It's about allowing time to multiply your wealth. Lesson 5. Control your emotions. Fear and greed are two of the biggest enemies of investors. When markets crash, many people panic and sell. When markets rise rapidly, many people become greedy and buy without thinking. Both decisions are driven by emotions rather than logic. Successful investors stay calm during uncertainty. They follow their plan instead of following the crowd. Discipline is often more valuable than intelligence. Lesson 6. Circle of competence. Another important lesson Warren Buffett follows is staying within your circle of competence. This simply means investing only in businesses you truly understand. If you understand banking, technology, healthcare, or consumer products, focus there. Avoid investing in businesses you cannot explain. Knowing what you don't know is just as important as knowing what you do. Great investors say no far more often than they say yes. Lesson 7. The power of compounding. Compounding is one of the most powerful forces in investing. Imagine a small snowball rolling down a hill. As it rolls, it becomes larger and larger. Money works the same way. Your returns generate additional returns, which then create even more returns over time. This is why starting early matters. Time is the greatest advantage any investor can have. Warren Buffett's Success. Reading this book alone didn't make Warren Buffett successful, but it shaped the way he thinks. He combined Benjamin Graham's principles with patience, discipline, and continuous learning. Over decades, these habits helped him build Berkshire Hathaway into one of the world's most successful companies. His journey proves that extraordinary wealth often comes from consistently following simple principles. Is this book still relevant? Although The Intelligent Investor was published more than 75 years ago, its lessons remain remarkably relevant today. Markets have changed. Technology has changed. The way we trade has changed. But human emotions haven't changed. Fear, greed, overconfidence, and impatience continue to influence investors. That's why Benjamin Graham's principles continue to guide successful investors across generations. Let's quickly summarize the most important lessons from this incredible book. Invest in businesses, not speculation. Ignore market noise. Always seek a margin of safety. Think long-term. Control your emotions. Stay within your circle of competence. Let compounding work for you. And most importantly, never stop learning. These principles may seem simple, but applying them consistently can completely transform your financial future. Warren Buffett once said, "The best investment you can make is in yourself." The Intelligent Investor isn't just a book about the stock market. It's a book about developing the right mindset. It teaches patience over panic, discipline over emotion, knowledge over speculation. If you enjoyed this video, please like, share, and subscribe to AK Next Gen Vibes. Thank you for watching, and I'll see you in the next video.